Well, hello, traders and investors. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective. Each time, asking ourselves what happened today, and what does it tell us about the coming ones. We do a show 4 times a week, every Monday through Thursday. Is broadcast at or before 10 o'clock Eastern Time, archived on YouTube, and it's under the channel L.A. Little. And if you want to subscribe, reach up the right-hand corner and do so. Anytime I push content that's listed content, in other words, not for members only, then you'll get that content pushed to you. So let's take a look at the numbers here. Today we had a down day, but Neoclassical allows you to look beyond just the headline numbers. As we'll go through the charts here in a minute, I'll show you what I'm talking about. If you haven't watched or haven't seen me do this before, what we're really doing is we're looking for supply and demand on the charts, and we're looking for significant areas where it means something. And so when we look at the indexes today, right, they're down 0.5%, down 0.75% on the Russell, down 1/3 on the Dow, or actually on the S&P 500. That doesn't look good on the headline, but when you look inside the charts, it doesn't look that bad. Matter of fact, it looks like we're going to lift up tomorrow. So elsewhere we had, so we'll go into that, but elsewhere we had gold and silver take a huge hit today. They were down yesterday. They were down big again today. Gold did reverse, closes down just slightly. It was down 1.5%. We had 2.5%, 3% on the silver market. DAX takes a hit. It was pretty much around the board. Tonight we're seeing a little bit of a lift here in the Nikkei, and the bonds actually did lift again today after being down. So let's turn our attention to the indexes. I'm going to start here on the sectors and work my way back to the indexes, and I want to show you how neoclassical works. If you want to read the tape, you need to be able to read what the charts are telling you, and it's about supply and demand. We all know that. So how can you find supply and demand on the charts? That's what I do. That's what neoclassical is. That's what my books were all about. Right? I mean, the first one here, the first one was more about money management. It was kind of an introductory book. But if you move over to these others, this introduced the neoclassical model. And then the last one actually took that model and said, okay, how can we find the best trades with that model? And made some new discoveries as well as part of doing that, and realized the significance of the retest regen as part of that last book. But let me show you how it works. And so I'm going to start, and I'll pop back up to, matter of fact, I'll start the other way. I'll start with the S&P 500. We'll work down to the sectors. At the big picture, right, is the indexes. You have 4 major indexes. The S&P 500 is one of them. Matter of fact, the major one. S&P 500 today trades under a number of significant areas. It doesn't mean anything unless it's significant, when you're trying to measure supply and demand on the tape, on the charts. One of the significant things that can be out there is swing point lows or swing point highs, H and L's. When they cluster, as they have here, and as they have started to do up here, when that breaks, right, when that area breaks, you're going to get a faster move one direction or the other, most likely, as a result of that. And so when you're looking for significance, that's one thing that can be very significant. There are others, but that's the one that shows on the chart tonight. And so what happens today? You come down, you break this one, you break that one, but you don't really get the full break because you really are just doing a test intraday. It's the end of the day that you have to look at, the end of the period of that bar. Since it's a daily chart, it's the end of the day. So what does it do? It gets under, back over, right? And it actually pushed a little bit more volume, which is a negative, but it was just slightly more volume. 38.4 versus 37.9 versus 38. And so you push a little bit more volume, so you test with more volume. That says that yes, you can test it again. But this is a hammer reversal, and the prior day actually had more volume than today. You hammer reversal. That says that you're probably going to see the ideal entry right on the bottom of this bar. That's your ideal entry point. Look for it to open potentially flat to down tomorrow, or at least test down, and then for it to probably flip around. That's Neoclassical at work. And this is a perfect example, which is why I'm taking the time to show it to you. As a matter of fact, if you want to learn how this stuff works, I've been toying with the idea of doing a special, 10 people only, 10 new subscribers. If you want to be, a tape reader, if you want to learn how this really works, an intense 10-day, 10 subscribers, I'll take. It'll be a 3-day period where we do a more intense look at this. And if you want to be part of that, I'm only going to take the first 10. Just give me a holler at TAT@tatoday.com. In other words, if I put it up here for you and show you how it looks, that's my address. You can write me at that address, and I will, first 10. I'll entertain the first 10 and describe to you what we're trying to do, and you can decide. And we'll only do 10. But it's, if you want to learn how to read the tape, it's a powerful instrument. You can do really good for yourself by learning it. So let's look at the NASDAQ, the broad NASDAQ. You'll see the same sort of pattern here. Swing point low, and in this case there's not multiples, but there is one here. Gets under it. And then there's another thing that's significant on this chart, and that is that if you look here, this bar is a wide price spread bar. A wide price spread bar, when you test into those, right, those are significant as well. And so essentially you're testing into a swing point low, right? You're testing into wide price spread bars. You have less volume than the prior day. You do a hammer reversal. Everything that you want, all of it happens. It's going to try to flip around, folks. Same thing with the NDX. I'm not going to pull it up. It looks the same. And then finally the Russell. The Russell does the same sort of thing. You got a swing point low. You get up underneath it. You get under the prior day. You have less volume. You flip around. You get back over it. It's not as clean as the others, but it's the same thing. All 4 indexes all telling you the same thing. All of them wanting to try and push higher. Overseas markets not going to be quite as good. They look like they could actually test lower, but you have it on the indexes and you also have it on the sectors. If you remember yesterday, we were talking about the basic materials. Basic materials push down, get under, back over, and they were doing a bullish retest, regenerate. So if we look over here, we've got a swing point high that was broken out over here. Once you break out, right, no test, right, until you get to here. Go up, you come back, you test again. That's the second test. Second test, still probability still favors that it's going to hold, but you did hit it with more volume, so it was a little bit more questionable. But you get under it, back over it, less volume, again, going to try to bounce. Energy, same thing, right? If you go down the list, folks, it's one after another, all doing the same thing, all telling you the same story, all echoing what you see in the indexes. So you have all 4 indexes and most of the sectors all telling you the same thing. When you see that, you can expect that you're going to get some sort of a bounce. The next question, of course, is where can it bounce to? But I'll leave that for another night. We'll get a bounce tomorrow most likely. That's where we're at. Again, if you want to take advantage, first 10 folks that want to subscribe, that's all I'll take. What I'm going to do is I'm going to give you an intense 3-day course on how to read these tapes. If you want to know that, if you want to be part of that, just jot me at that same address. And once again, that's TAT@tatoday.com. Just tell me you heard about it here on the show and you'd like to take advantage of it, and I'll send you some information or have the folks send you some information. Thanks for joining me. Join me on Sunday night. We're going to do a special, a little bit special of what we've done before, but we'll look a little bit broader, a little bit longer term as to what's happening in these markets. Have a great one. I'll see you next time. Good night.